Hello everyone, Godre here, and this is my money brief. So, on today's money brief, I want to talk about the latest data from the National Bureau of Statistics. So, the MBS just released its capital importation data, and the numbers are green. Yeah. So, for those who may not know, capital importation basically is the data that tracks how much investment Nigeria gets from foreigners, or how much foreign investment we're able to attract on a quarterly basis. So the report is published on a quarterly basis. And the last data we had was the first quarter of 2024. And so the second quarter data has been due for a bit, and it just got published just today, Wednesday, um, by the MBS October. And of course, this is data that is should have been due maybe in July because it was for the quarter end in June. But anyway, let's leave that aside. The problem is the data itself. So, according to the data, Nigeria attracted just $2.6 billion in the second quarter of 2024. That's very disturbing because in the first quarter, Nigeria attracted $3.9 billion, and that was just solid numbers all around, especially when you compare it to previous years. So, but we did bring in just $2.6 billion, and to be fair, it is still better than the $1 billion that were brought in this same period in 2023, of course, because of the elections and all that. So investors didn't come here, but also more than the $1.5 billion that we attracted in 2022 for the same period. So, in a nutshell, it's still better than, and even much better than the $875 million we brought in 2021, same period, second quarter. And also better than COVID year as well, 2020. And only the only quarter that's better than it is 2019, which was $6 billion, when things were sort of like still okay. If you remember, exchange rate was still 360 to the one to one to 360 naira to $1. And so $2.6 billion, one of the worst that we've seen this year so far. I mean, it's just two quarters, anyways. So it's grim because I'm comparing it to the quarter before, because I think that we should be going higher and not lower, but it looks like we're going lower, and that's why I'm a little worried here. Um, but let's sort of look at this data in detail and see what, if there are things that we should be worried about. So capital importation into Nigeria is typically divided into what you call foreign portfolio investments and foreign direct investment. Those are just the two major ones. So foreign portfolio investment is hot money. That's the money that goes into the bond market, stock market. So it's basically like a revolving window. So it comes and goes. And then you have the foreign direct investment, which is one that stays, right? That's the money that people who want to really invest in the economy brings in. So Nigeria typically attracts foreign portfolio investments. That's what we've always done better at, even though that one has also been dwindling more recently. But FDI is usually the best, but we haven't really been getting a lot of FDIs. Apologies for my mic. I understand this how I have to hold it so that you guys can hear me clearly. So this quarter, let's start with FPIs. That's the foreign portfolio investment. So from what I can see, foreign portfolio investment was $1.2 billion. Sorry, it was $1.4 billion. Yeah, in the second quarter compared to $2 billion in the first quarter. And interestingly, the reason why we are seeing that drop is because foreign investors reduced how much they invested in money market instrument like treasury bills and things like that. So, and also how much they invest in bonds. Even though we saw a slight uptick in their investment in equities, like stock market. So the stock market went from $49 million in Q1 to almost $150 million in Q2. But where we saw a drop was in investment in bonds and money market. Investment in other loans or trade credit was fairly okay. So that's not that. So that's essentially why there was drop in FPI. But what was actually shocking to me was the drop in foreign direct investment. So foreign direct investment, we only attracted $29.8 million in the second quarter of this year. That's the lowest ever. Like, at least we've been tracking this thing in Nairametrics since we had data dating back to maybe 2007 or thereabout. And we've never seen, the last time was, the lowest was, I think, last year, sometime last year, when it was 50 something $million. And of course, that was election year and all that. But this is the lowest we've seen. And I'm just confused. Like, why? I thought that we should see, you know, that number go up, not go down. But at $29 million, that's just plain ridiculous. I don't know what's going on. And if you try to disaggregate it, most of our foreign direct investment is in the form of equity. That means people taking stake in companies in Nigeria. But it's as if foreign investors are not interested in investing in Nigeria. So the whole of last year, we only did $377 million. In fact, between first quarter and second quarter last year, we had done just $133 million. But first quarter of this year, we had done 119. So it kind of looked like things were picking up. But the second quarter was just $29.8 million. So that's really a border for me, because I expect to see this number sort of inch up. Um, I know that the conventional explanation or implication of this will be that maybe this might have an effect on Nigeria's FX situation, because capital importation is usually directly related to FX. But I don't think that is what I don't think it's gonna be that simple, because remember, these are Q2 numbers and we've already seen Q2 happen already. So I mean, there's really nothing that I'm expecting. Q2 has passed since, so Q3 just even finished. So perhaps the only link here is maybe that's why we're seeing so much pressure on the exchange rate, because it looks like we're not really seeing the liquidity that we expect. And remember, in my last podcast, I'd mentioned that foreign I'd mentioned that foreign supply was a major issue that is affecting price. Remember, I kind of try to explain the difference between price and value. So yes, even though the value of the naira against the dollar is not nowhere where it is now, because we think it's undervalued, but the price issue is still a problem. So we still have a demand supply issue, supply demand mismatch, and I think if there's anything that this data tells me, that's probably it. We're not seeing, you know, foreign portfolio investors and foreign direct investors come into Nigeria as much as we expect, despite some of the progress that the government has made in terms of FX reforms. I know it's probably going to take some time before we start to see FX reforms yield fruit, but it's just it's just a bit concerning that these numbers are down. I hope maybe at the next MPC meeting, I'm pretty sure the CBN will try to explain what has happened, and maybe that will give us a bit more clarity. But in the meanwhile, that is the interpretation of the data. If I get more information, I'll definitely share with you all. But for now, look, I just need to properly digest these numbers and figure out what this means, and maybe in subsequent podcasts I'll try and explain a bit more. All right, so I mean that's it. But I mean, let's just take favor on the fact that at least we got $2.6 billion in pretty small poultry. But I mean, think that the whole of last year, I think we only got $3.9 billion, and the first half of this year already we're doing 2.6. Q1 this year we did 3.3. So this year already we're doing 5.9, almost $6 billion. So we're basically almost doubled what we did in whole of 2023 in the first half of 2024. So that's a silver lining, but still disturbing. That's the money brief, and I hope you guys have a profitable day ahead. Bye.